Thank you for joining me to the introduction of the Ichimoku Kinko Hyo. My name is Christopher. I'm a currency strategist at Global FX Club, and I'll be showing you exactly how we use the Ichimoku to find certain trends and basically how to trade every day for your day trading. All right. Now, like I said, this is the introduction, and Ichimoku Kinko Hyo was founded by Gyoichi Hasade in the late 1930s. However, he did not finish his project until the late 1960s, and the component or the Ichimoku, what it stands for, or what is referred to as one look or one glance, mainly because when people see it, they're often very how can I say this um, intimidated by so many of its components that they really don't give it a second glance or a second chance. All right, and the main purpose of this indicator is to give bullish and bearish sentiment to locate a specific strength of a trend and for support and resistance levels as well as entry and exit signals. All right, now the components of the Ichimoku is made up of the Tenkin, the Kijin, Senkou Span A, Senkou Span B, the Kumo, which is also known as a cloud, and the Shiku Span, which is known as a lag indicator. The Tenkin-sen, that represents the short-term movement for price. It's an indicator of market trend. And one thing when you have the Tenkin-sen on your chart is just remember that it should always point towards the same direction as the trend. And the steeper the angle of the Tenkin, the stronger the trend at movement of price. All right. And to calculate the Tenkin, it's the highest high added to the lowest low divided by 2 for the last 9 periods. The Kijun, however, is a longer moving average, and that represents the medium-term movement for price. And this line, this Kijun is really key for a lot of traders because it acts as a confirmation. It's a really key level when we talk about support and resistance. And once people get into a trade, it really helps out as far as trailing stops, especially when you're working on certain time frames. All right, now to calculate it is the highest high with the lowest low divided by 2 for the last 26 periods. The span A is also known as the leading span. This forms one edge or one boundary of the cloud or the Kumo, and is a Tenkan-sen added to the Kijin divided by 2 plotted 26 periods ahead. Now span B, that forms the opposite side of span A, and the makeup and the calculations is slightly different. It's 52 periods high plus 52 periods low divided by 2. Now, the main, I guess, event is the Kumo and the cloud, and the space in between the Senkou Span A and B makes up the actual cloud. And the edges of the cloud, that's what identifies current and future support and resistance levels. All right. Now, this is very important that we understand that the shape and height of the Kumo is based on price changes as large volatility and price movements that equals thicker clouds, which offer greater support and resistance. And what I mean by that is the Kumo. If you've ever seen the Ichimoku and you did look at the composition of the cloud and what it's made up of, you see a lot of funky shapes of the cloud, and you might not understand why are the clouds shaped like that. We're going to get to a chart soon, but we could just know that the volatility, all right, the larger the volatility from past prices, that would equal thicker clouds. Now, if we have a lot of money being pumped into the market, which creating thicker clouds, what that means is that we have more support and resistance areas, and those support and resistance areas are labeled in the cloud. So when we have a thick cloud, we should automatically know that in order for price to break through that cloud, we're going to need either heavy buying or selling pressure, because the makeup of this cloud, because it's so big, it means that it was very volatile and we had so much money being pumped in. All right, and we'll get to all that. The Shiku span, I don't use this. You would not see it plotted on my chart. I really don't find a use for it, but it's known as the momentum indicator, and that's current price shifted back 26 periods. And the way you read it is the sentiment is bullish if the Shiku span is above the price curve from 26 periods ago, and the sentiment will be bearish if the Shiku span is below price curve from 26 periods ago. All right. Now we're gonna look at pound dollar. This is a 15-minute chart. All right. The Ichimoku, knowing how to use it, really works across all time frames. I don't trade on a 1 minute or 3 minute, but I have seen them been used on a 5 minute. You really have to have a set strategy. Um, is one of those indicators, like all other indicators, you really need to understand it fully before you trade, especially on smaller time frames. But I'm going to be using a variety of time frames for my example to show you guys that it does work on a 15-minute chart, 5-minute chart, hourly, 4 hour, and especially daily, which is its bread and butter. All right. But looking at this 15-minute chart, I want to just point out the cloud. All right. We have the makeup of the cloud. As you see, this red space, this is the cloud. This yellow space in between span A and span B, that is a cloud as well. As you can see, the thin cloud, and as you can see, as trend moves to the downside in the past, it really makes for a strong, thick bearish cloud for the future. All right. So all this down pressure, selling pressure, really dictates this cloud right here in the future, making it harder for price to reverse for a bullish sentiment. All right, but now let's take a look at the Tenkin. The Tenkin on this chart is represented by the blue line, and the Kijin by this tan line. Now, this is exactly what traders look for when looking to get inside, get into a trade using the Ichimoku. They look at Tenkin Kijin crossovers. All right. Now, as you see, this Tenkin cross below the Kijin below the cloud. When we have Tenkin Kijin cross below a cloud, it's considered bearish. Any Tenkin Kijin cross to the downside when a Tenkin cross below the Kijin is bearish. But because it happened below the cloud, it's a strong bearish crossover. All right. If this Tenkin Kijin crossover was to occur within the cloud, it'll be considered medium. Why? Because the crossover occurred within support and resistance layers. Now, what happens if we get the crossover above the cloud? If we have a bearish Tenkin Kijin crossover above the cloud, then it's considered a weak crossover because price has not yet broke the support and broke the cloud, meaning that it would need to break below the cloud in order for us to really know that it's a bearish sentiment. So we look at the 15-minute chart, we see that we have the crossover occurred below all support and resistance levels. Now what happens is we take a short at the very next candle, and look how price allows you to stay in the trade for a long period of time. Now I'm not going to get into exactly where your stop should be because many traders use different stops, but ideally you want your stop to be, I guess, above the Kijin. Now, where do you get out? Some traders will get out at open and close above the Tenkin. Some will get out at open and close above the Kijin, and some traders will try to ride the pair as long as the move remains valid, and they'll get out at an opposite crossover to the upside, which occurs right here. But either way, you do see that after the crossover, if you were to take a short, it allows you to stay within the trend for quite some time, really generating a lot of pips. Now, let's say you did get out like around here, capitalizing on about 30-40 pips. What happens again? We get another strong crossover to the downside. All right, and this strong crossover allows us to regain and capitalize on another about 30 pips, really making us about 70 pips for the day, and this is over a 15-minute chart. All right, now if we take a look at pound yen, and I went to the 4-hour chart, we took a pound yen. Look at this crossover. It occurred below the cloud, which means that it's a strong crossover. All right, so what we do, we wait for the candle to close, and we take this short. Now, remember how I mentioned that the Kijin could often be used as support and a resistance layer, or I'm sorry, a level. Look what happened to price. Price fell, corrected, and used the Kijin as a springboard to continue falling to the downside. All right. If you were to put your stops above the Kijin, it really allows you to get in most of this trade. But if you did indeed, however, stay into this trade until we got another crossover to the upside, you really capitalize over 170 pips off of that move. All right. Um, if you wanted to get in again at the pair, what do you look for? Another crossover to the downside. All while, don't forget, because price is below the cloud, our view and our sentiment on pound yen should always remain bearish. All right. As long as price is below the cloud, our sentiment and our view on any particular pair should always be bearish, and you should always be looking for a bearish setup. So if you did miss this trade, um, you could have got another chance to get in again at another crossover to the downside. This is another strong crossover. All right. However, you will want to wait until price breaks and closes below the Tenkin. So let's just say if we got in at this level right here, look what happens to the price. It just tanked. All right. And whether you're a trader that wants to get out fairly sooner than later, you could have got out at a close above the Tenkin. You would have capitalized over 900 pips off of this move alone. All right, because as you can see, price around here, I don't have I don't have the actual cursor to help me out, but this movement is about 900 pips, and as you can see, once again, look how price treats the Kijun. All right, it bounces off of it and continues climbing to the downside, all while we have a bearish cloud, all while having a bearish sentiment on the pair. Now, Aussie yen, it gave us three opportunities: medium, strong, and strong. Three opportunities within 1 month to really capitalize on some profit. We have this medium bullish signal. However, you wouldn't take this trade until price breaks above the cloud. And not only do we get a price break above resistance, look at the kind of candle we have. This is a more impulsive candle after some consolidation, really giving us some insight that we might be on a bullish upside trend for some time. All right, so let's say you did get into the pair and you got out at, let's say, open and close below the Kijun, or let's say you just got out at a bearish Tenkin Kijun cross to the opposite side. You really had a chance to capitalize over 150 pips on this move alone. All right, if you missed this move, for let's say you had a chance to get into this trade at another strong crossover right here. All right, now you wait for the open and close of this candle. It closed, and you really just ride this pair to the upside, minor pullback, use the Kijun, and again, like I said, a good support and resistance, and you're seeing it now how this really proves to be a good level, I guess, to get long or get short, because price often gravitates towards the Kijun. But like I said, we're riding this pair up again. Most traders will wait for open and close below the Kijun. Some traders will just wait for a crossover to the opposite side. Either ways, you would definitely gain well over 162 pips on this move. And let's say you didn't catch that one, we had another strong signal, and this move was actually also a very strong one. All meanwhile, price is above the thick bullish cloud. And once again, like I repeated on the last example, if price is above the cloud, we only look for bullish setups. All right. So with this strong crossover, we got in. You could have got out at a close below the Kijun, or you could have got out at a taken Kijun cross to the opposite side. But either ways, three very classic setups of the Ichimoku and how people use it for the everyday trading. Those are 4-hour charts. Now the real money maker is the daily charts, and some people just use the daily charts to trade strong and medium crossovers, and that's how they just trade. All right, and this is the Euro Aussie, and I chose the Euro Aussie because I wanted to show everybody that the Ichimoku really works across a variety of pairs. All right, so when we look at the Euro Aussie, you guys should all know by now this is a strong cross. All right, price came from above. I mean, the Tenkin came from above, cross below the Kijun. We got in at this trade. Even if you wanted to get out right here, this is over an 800 pip move. All right, so we carried it all the way down. If you had your stops at the Kijun, you could have trailed it all the way down, 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 and that's another reason why people like trading the Ichimoku, it really allows you to use all aspects of what makes a successful trader into one indicator. Allows you to get in a trend. I'm sorry. It allows you to get in a specific trend. What it also allows you to do is catch 80% of that trend, and if you're a trader having a hard time knowing where to put your trailing stop, you could put it at the Kijun, and you could just, as price is moving to the downside, you could follow your stops with the Kijun. So it really makes it makes you a more efficient trader. It allows you to see the bigger picture, and if you're ever confused about what the sentiment is, look for where price is. If we're below the cloud, then we should be bearish. We should be looking for short setups above the cloud, bullish. All right. So with that being said, we were able to capitalize over 800 pips on this move in less than 2 months. I think this move occurred about a month and a week or two. All right, making this pair or making this Ichimoku really useful. And this is off the daily chart. We take a look at the euro dollar. All right, we have a medium crossover. Price broke below the Kijun, and the crossover occurred within the cloud. So what do? We wait for price to close below the cloud, and what do we get? A gap to the downside, allowing us to take this short and carrying this short all the way to either a close above the Tenkin or for a crossover to the upside, and this move alone generated over 350 pips. All right, and if you missed out on this trade, then we had another strong bearish signal to short the pair. All right, and you would have gotten at the open of this candle, and you would have rode it into either it made a new low or until we had another signal to the upside. Either ways, you would have generated well over 200 pips on just 2 trades. You would have gained over 600 pips, and this is exactly why I like the Ichimoku. It's very easy, it's very simple, which is ironic because most people feel like it's very hard to understand just looking at it. They say it makes their head hurts, but once they figure out what the components are and how to use it, they really convert, and actually it's exactly how they trade. And this is only the introduction to the Ichimoku Kinko Hyo, but there's so many aspects on how to use it for trading. We didn't even really get too deep into how to use it with the cloud and the Shiku, and there's a whole bunch of different type of strategies that we have at Global FX Club that allows us to use the Ichimoku on different time frames. As I do know that we have 15-minute traders, we have hourly traders, daily, and even weekly. And so I really look forward to making other videos for you guys and showing you how we really utilize the Ichimoku for our trading. But until then, I hope you guys enjoyed this video, and just be on the lookout for the next one. Alright, well, thank you for watching, and until then, good luck trading, everybody.